Happy Friday, Eric Bible with the Bible team at Neil Home Loans. And yes, as the title reads, mortgage rates hit the lowest levels of 2024. As we kick off Friday morning, the 30-year fixed is sitting at 6.62%. Yes, you heard me right, 6.62, down from last week, 6.91. And the big question becomes, what drove this week's decline? And is this decline now different than what we've seen in cycles past? So this week I'll jump into that. Plus, what message can we bring to our clients in this moment? So let's first dive into really what drove the markets this week and ultimately why we believe that this decline is now different and has really set the stage for what we can expect going forward from here. So, as I've been mentioning over the last few weeks, July's Fed meeting was something the markets were eagerly anticipating. That took place this week, specifically on Wednesday, well, Tuesday and Wednesday. And the anticipation walking into it was that the Fed was going to leave rates unchanged, and they did just that. But what the market was really looking for was when we can expect our first rate cut. Market's been anticipating eagerly that first rate cut's likely going to come sometime in the September meeting and not the February meeting. Well, again, as expected, Fed left rates unchanged. But Jerome Powell at the podium gave the markets exactly what he was looking for. When pressed by reporters of is a September rate cut on the table, where he didn't directly say yes, he left that door open, and that's all Wall Street needed, and in turn, what mortgage-backed securities needed, and why we saw really this sharp decline in rates compared to where we were last week. And really, the question we're getting from our clients, the questions we're getting from individuals like yourselves, is this time different? And where, yes, over the last 2 years, we've seen rates follow that roller coaster effect. They've gone up, they've come down. We've all said, hey, this is the corner we've turned and rates are going to get better, yet they got worse. So, what makes this time different? So, if we look back over the last 2 years through this cycle, when moments like this where interest rates declined, the data was telling a different story, specifically around inflation as well as employment. And we look to what's occurred over the last 3 months with not only inflationary data, where we've seen a steady decline on both the headline and the core reading of inflation, the labor market. And as we know, the Federal Reserve has a dual mandate: maximum employment and price stability. The fact that we've seen inflation decline at a very, very precipitous rate over the last 3 months, as well as unemployment starting to creep past that comfort level. We know that the Fed wants, has anticipated 4.1. We're already there. So here, those two components now showing consistency over the last really 3 months sets the stage that, yes, this time is different. So what message can we bring to our clients? How does this help us right now? Where again, we know rates are still presenting an affordability challenge. But the other piece of that puzzle is inventory. Inventory is near some of the lowest levels, as I've been saying, as we all know, of our lifetime. And my greatest fear is that interest rates decline much further from here. All those individuals that have sat on the sideline for the last 2 years waiting for this exact moment are going to jump back in. And it doesn't appear that inventory is going to sharply rise as we would all want, need, or hope for. So with that case, with declining interest rates and a finite amount of supply, what happens to home prices? Yes, you get a lower rate, but the value of that home or the price that the end user pays exponentially grows. So where, yes, rates are still elevated. I do not want to diminish that, but they are sure of a heck lot better than they were last week and 2 months ago. So take this opportunity now and purchase at a lower price on rate. You'll always have an opportunity to refinance when the real drops start getting underway. As always, if you run into challenges and need help conveying this message to your client base, we're here. We would love the opportunity to connect and help get this information out. As always, make it a fantastic Friday and an even greater weekend. Thank you.